back to the channel, good people. Thank y'all for stopping in. We got a lot to unpack today. Main topic today is going to be Nvidia. Nvidia is starting a nice little run, so why not put a little bit special attention on the 900-pound silverback gorilla? So we're going to talk about that today and a few other things going on in the economy that will affect the stock market. You guys know the bulk of my assets that I'm buying right now are paper assets, big boy blue chip paper assets. So I got a real vested interest in keeping up with these companies and these ETFs that I'm investing in. So that's what we're going to talk about on this channel today. Matter of fact, that's what we're going to be talking about on this channel for the foreseeable future is paper assets, right? Not really investing in any real estate right now because interest rates too high. When interest rates come down over the next couple of years, I'll be back into real estate again and buying some great properties and putting great tenants in those properties and getting rental income and getting, property appreciation. All that good stuff's coming. But that's going to be in the next couple of years. So until that happens, my focus is on paper assets and building businesses, right? So that's the strategy. The strategy is paper assets, building a business, and then we'll throw real estate in there once interest rates come down over the next couple of years, which I believe that starts next week on September 18th. When the Federal Reserve reduces the short-term interest rate, AKA the Fed funds rate, that's going to start coming down next week on the 18th. We're going to get a 25 basis point decrease in the short-term interest rate, like I said, AKA Fed funds rate. Now, a lot of y'all might say, well, golly, Fed funds rate is not the 30-year fixed rate for mortgages. You're absolutely right. But what you got to understand is the Fed fund rate directly influences the 30-year fixed rate, right? Because the 30-year fixed rate is tied to what? 10-year treasuries, right? 10-year treasury bond rate, directly tied to 30-year fixed mortgage rates. They compete for the same customers, right? But the 10-year treasury bond rate is tied to what? Fed funds rate. So indirectly, the Fed funds rate is tied to the 30-year fixed mortgage rates. So when the Fed fund rates come down, indirectly, over time, the 30-year fixed mortgage rate comes down. When that happens, then I can go to a bank and say, hey, bank, give me 80% of this purchase price so I can buy this really good property and put a tenant in it. I'm going to put 20% in. You give me 80%. They call that 5-to-1 leverage. In my old banking days, we call that 5-to-1 leverage, which I used for 25 years to buy real estate for profit, for cash flow. So we'll be doing that in the coming years, but until that time, we're going to focus on paper assets, big boy blue chip paper assets like Nvidia. And as you know, Nvidia is one of my favorite companies in the whole wide world. And I got a lot of money invested in that company. And guess what? That company right now today is at $120 a share. It's like taking candy from a baby, man. I keep telling y'all, big boy blue chip, just stay the course. Just stay the course. Now, that doesn't mean we won't have a bumpy road. We'll have a little bit of a bumpy road, right? We'll have a bumpy road. This thing ain't finna, it ain't finna, we're going to have some red days. We ain't out of that yet. But right now, I'm going to enjoy the green days because I got a lot of red days that I picked up this stock with the low price. The low. So now I go look at the portfolio because I've been picking up this stock at the low. So I go look at the portfolio and it's looking really good right now. course, I know we're going to have bumps along the way, but we're going to talk about where this stock price is going. And I'm going to give you the date. So if you're anybody out there that's trying to build wealth and you're looking for big boy blue chip to do it, you might want to put this company on the short list. You also may want to get down in the description box and click on that Moomoo link, because you're going to need a world-class brokerage app to be able to buy this company and the other companies that are going to benefit from this company. Oh yeah, artificial intelligence ain't dead, guys. It's just getting started. It's in the toddler stage. See, I missed the infant stage, which started back in 22. I missed that stage. Now, I had it in the S&P 500, so don't get me wrong. I still indirectly benefited from Nvidia through the S&P 500. I also benefited from Nvidia through my information technology ETF that I've been buying for years. So I've already had some benefit from Nvidia, but I never bought it individually until 2024. And since I bought it individually since 2024, I've recognized over 150% return on the dollar. Every dollar, 150% return on it in this company. Now, not trying to be your financial advisor, can't tell you what to do, can't tell you what return you'll get, but I'm just telling you, since I've been rocking with these folks, the good folks at Nvidia, the best CEO in the world, Jensen Huang, since I've been rocking with this fellow, I've returned to myself. See, I've sent $1 out, and that dollar has bought 150% back. See, every dollar I sent out, I want 150% back. I want you to bring some friends back with you. So every little dollar I sent out there, hey man, you're 18 years old, you got to get out there and go make some money. Every dollar I sent out, I tell them this: listen, dollar, you're 18 years old. I've taught you well. Now get on out there and go bring me some dollars back with you. So every dollar that I put in this company, I've gotten 150% return on that dollar. Well, golly, it went down to $90 a share. Well, you lost money, didn't you? No, I actually made money. No, I didn't lose no money. I actually made money. See, you make money in the red. I keep telling y'all, you build wealth in the red. You collect wealth in the green. See, this would be green. This would be where you collect the wealth at. So I could parachute out this thing right now and put a cool 250 in my pocket, 250K in my pocket. I could parachute out because I got 11,200 shares of this company. I could parachute out today and put a cool $250,000 in the pocket, but I ain't parachuting out today. I ain't parachuting out for a while, guys, because I got big hopes, big dreams for this stock. But back to what I was telling you, if you're interested in this company and other companies, other ETFs that I'm going to be buying to 10x the net worth, get down in the description box and click on that Moomoo link. You need a brokerage account, guys, if you're going to be able to buy big boy blue chip and copy the plan, follow the blueprint. See, people email me all the time, follow the blueprint. I'm not a financial advisor, can't tell you what to do, but I built wealth for a long time, man, doing what I do. I've built wealth for a long time, guys. I've been in the stock market for 30 years. So I know a thing or two. I know a thing or two. Now, don't know a lot about stocks, but I know a lot about companies because I spent 25 years as a commercial and retail banker in some of the largest financial institutions in America. That would be Bank of America, Wells Fargo. Yeah, those two big boys, 2 of the 4 largest banks in the country. I spent a lot of time working for them in commercial banking. So I know a little bit about evaluating companies because that's what I did. I was a commercial banker. I evaluated companies to decide if we're going to lend them money or not. No, don't get me wrong. I didn't evaluate companies at the size of Nvidia, but guys, I don't care how big the company is. You evaluate them the same way. You look at their financial statements. You look at their projections. You look at their products. You look at their market share inside of the industry that they serve. I don't care if they're a little company or a giant company. You look at them the same way if you're going to lend them money. right? So I know a thing or two. So this big old boy company, Nvidia, I said to myself back in January, I said, well, goodness gracious, I missed the infant stage, but we're getting ready to roll into the toddler stage, and then we're going to roll into the teenage stage, and then we're going to be full-grown adult stage. See, but by the time this thing gets to full-grown adult stage, guys, by the time this thing gets to full-grown adult stage, $1,000 a share or higher, over $300–400 billion in revenue by 2030. Can you imagine what all them little dollars I sent out early on in the toddler stage? I sent them little dollars out to bring friends back with them. Can you imagine when they come home in 2030? Can you imagine the friends they're gonna bring home when this thing is at $1,000 a share plus? That's gonna take a minute to get there, but that's where your patience comes in. That's where your discipline comes in. That's where your consistency comes in. Now, here's the bad news. Here's the bad news. A lot of y'all haven't been taught any of those things, not by the matrix. See, because since you've been in kindergarten, maybe 5 years old, when they put you into their school system, they put me in there too. Don't get me wrong. I went to the public school system and they brainwashed me too. Because when I was 26, I was dead broke. Didn't know anything about money. All I knew how to do was spend money. Didn't know how to multiply it at that time. So I get it. I know a lot of you guys don't know how to multiply money. You know how to spend it, but you don't know how to multiply it because they never taught you how to multiply it. All they teach you when you're from kindergarten all the way up to your PhD, they teach you how to get a job and spend money. They don't teach you anything about multiplying it. So I get it. So a lot of y'all are foreign to this whole stock market thing. A lot of y'all are foreign to this real estate investment thing. A lot of y'all are foreign to this how to build a business from zero into a multi-million-dollar business. A lot of y'all are foreign to that, but that's okay. I was foreign to it too, but I had to learn. But in order for me to learn, I had to discipline myself. I had to be more consistent and I had to be patient. So you're gonna need to adopt those 3 financial behaviors if you plan on doing this and staying in this, right? Now, again, I'm not a financial advisor. I'm just a regular guy on YouTube that's been buying big boy blue chip paper assets for 30 years, building businesses for about the last 5 years, and then been in commercial banking for 25 years before I retired at 50 years old. Retired, got out of that, started a YouTube channel, and in 4.5 years, have done very well on this YouTube channel and have helped thousands and thousands and thousands of people get this right. Just get the mental right. Because see, my whole YouTube channel is about getting the mental right, getting your behaviors right, your financial behaviors right. And then once you get those things right, building wealth is easy. The hard part about building wealth is people don't have any discipline. They don't have any commitment, no consistency, no patience. That's the hard part about building wealth. See, it's hard to stay in a stock like this when it goes down to $90 a share and you got in at $125 and it goes down to $90 a share. See, if you don't have some discipline, if you ain't got no consistency and some patience, you're going to lose your mind and you're going to bail out on this thing and take a loss, and then now you're done. They got you in the matrix for the rest of your life. You'll never invest in stocks again because you didn't have the 3 fundamental things you need in order to do this, which is discipline, consistency, and patience. See, without those things, this means nothing because hard times will come. And when this little thing right here is not green, but it's red, and instead of those numbers going up, they're going down. If you don't got them 3 things, you're not gonna last in there very long. And the people in the matrix know that. Wall Street aliens know that, right? So now that times are good right now, everybody want to buy. Everybody jumping on this thing like crazy, the little retail investors. Everybody jumping in. See, this is how they get y'all. They show y'all this green right here, and then they throw a couple little positive articles in, and then boom, here come the retailers. And then before you know it, next week or the week after that, this thing go red again on you. See what I'm saying? So you got to have patience, you got to have discipline, and you got to have some consistency, guys, because this thing will go red again. It ain't gonna stay green like this the whole time. It's going red again. Then what you gonna do? And if you don't got them 3 financial behaviors when this thing go red again, it's gonna be a nightmare for some of y'all. It's gonna be a nightmare. So please, if you're gonna get in this game, get in it for the right reasons and know exactly how to prepare yourself mentally when this thing go red again, because it will. It's not gonna be like this forever, guys. It's going red again. I don't know what day it is, but if history tells me anything, it'll probably be next week. It'll probably go red again next week. It might even go red again by Friday. So just understand what's going on here. We're gonna walk through that. We're gonna walk through what's happening. We're gonna unpack and walk through why this thing is actually bouncing right now. Some of y'all don't even know why it's bouncing. But we're going to walk you through that. And then we're going to walk through what price this thing could end up at and how long it's going to take for it to get there. We're going to go through that as well. Right? We're going to go through that as well. But like I said, guys, get down to that description box, click on that Moomoo link, open up that Moomoo account today. If you want to be in position to be able to buy this company or any other company or ETF that you like, you got to be in position, guys. And then the good folks at Moomoo are going to give you up to 15 free stocks for just trying out their brokerage app. But then it gives you the platform where you can buy Nvidia if you want to. Not because some guy on YouTube said buy it. No, you buy it because you want to and you understand the risks associated with a large reward. Large reward carries what? A lot of risk. So know that before you go pushing the button. Oh, golly, oh, goodness gracious, it's going up. This guy said on YouTube it's going to go to XYZ. I'm buying today, and then all of a sudden next week this thing at $85 a share. Then what you going to do? You're going to come back and point it at me, right? Oh, yeah, the guy on YouTube told me to do it. No. Know why you're buying it, guys. Know some history about this company. Know what the direction of this company is. And I try to provide you guys that on my YouTube channel based on my research. But I'm not an expert. I'm just a regular schmegular that's been doing this for 30 years, blocking and tackling. If you know anything about pro football, you know the bread and butter of pro football, the very good teams, the ones that win Super Bowls. I'm talking about the Patriots. I'm talking about the Kansas City Chiefs. I'm talking about teams like that. The last couple of dynasties in the NFL have been the New England Patriots, and now you got this new dynasty, which is the Kansas City Chiefs. They got a great quarterback. They got a great coach. They got a great team. They got a great ownership. But fundamentally, why are they so good? Every year in and out. Why are they so good? They're so good because they're disciplined, they're consistent, and they're patient. So I don't care what walk of life you want to dive into, you're going to need them 3 things, guys, if you're going to be the very best of the best. Now, if you want to be mediocre, never be the best, never reach your full financial potential, don't adapt those 3 things. Just keep doing what you're doing, and you'll continue to be mediocre. You will never be the best you. See, you're not competing against me, guys. You're not competing against the other guy. You're not competing against the other gal. You're competing against yourself. Because inside of you somewhere is a great, great, great human being. Whether you pull that greatness out of you or not is up to you. It ain't got nothing to do with me. See, a lot of times what we want to do in this country is blame others. No. If Richard Fain is going to be great, it's Richard Fain's responsibility to be great. Everything I need to be great is inside of me. I just got to pull it out. Everything you need to build your wealth and become great is inside of you. But are you willing to pay the price? Are you willing to discipline yourself? Are you willing to be consistent? And are you willing to be patient? That's the price you'll need to pay. I am willing to pay that price every day I get up. Now, some days I fall short. Some days I fall short. I'm not as patient as I need to be. I'm not as disciplined as I need to be. And I'm not as consistent as I need to be. Some days I fall short. But you know what I tell myself at night before I go to bed? I said, Lord, give me the strength I need. Give me the discipline I need. Give me the consistency I need. Give me the patience I need to be better tomorrow than I was today. And then I go to bed. So every morning I wake up, I ask God the same thing. Today, God, give me the strength to be disciplined, patient, and consistent. You're going to have to figure that out, guys, if you're going to build wealth. Just like any other person, it's up to you. It's up to you. Like I said, get down to that description box, click on that Moomoo link. If you open up a Moomoo account today, they're going to give you 15 free stocks if you put $1,000 in your new Moomoo brokerage account, ASAP Rocky. If you put $100 in that new brokerage account, they're going to give you 5 free stocks, ASAP Rocky. Now, what does that do? You start the journey, right? You start the journey. Because see, to open this account takes some what? Takes some discipline. It takes a little bit of consistency. It takes a little bit of patience. Now you're starting down that pathway of building wealth, becoming a better investor, becoming a better overall human being, right? Nobody wants to work for somebody for the rest of their life, guys. But if you don't develop these 3 financial behaviors, you will work for somebody for the rest of your life. That's up to you, though. That ain't got nothing to do with nobody on YouTube. That ain't got nothing to do with nobody in your family. That ain't got nothing to do, oh, golly, I didn't finish high school. So, yeah, I'm doomed to this. Oh, yeah, I got a PhD, so I'm smart enough. And no, it ain't got nothing to do with any of that. It got to do with you. Just make the decision. Just like I had to make the decision, you make the decision. Let's dive on into this thing. And we're going to talk about Nvidia. Let me walk you through something here. Nvidia's CEO, Jensen Huang. See, listen, guys. Don't buy the stock. Buy the CEO. See, these people in my Wealth Builders group, these some smart people over there, man. We got almost 1,100 people over there in the Wealth Builders. But boy, I tell you what, we got some smart people over there in that community chat that we be in every single day, helping one another, building one another. And if that ain't your, and if you're over there and you ain't doing it and I catch you, I'm gonna block you. So we got some people over there that are real smart. And they're willing to help people. They already got a level of wealth. They probably don't even really, do they have to help? No, they already built their wealth. They're continuing to build their wealth, more wealth, but they're over there. And they're helping every day, encouraging new investors, encouraging people who are just starting to, the light bulbs starting to come on, and they say to themselves, okay, I've been in the dark, in the matrix. I've been in the dark all my life. Now all of a sudden the light came on. And I'm in here, the light bulb came on, and I'm starting to get disciplined. I'm starting to get consistent. I'm starting to be more patient. See, the light bulb came on, boom. So these people over in my Wealth Builders group, they're starting to help these folks. And now everybody is starting to say, well, okay, I get it. I'm not going to panic when this stock goes red. Obviously, that's an opportunity for me to buy a little more if I can afford it. And just continue to work on my patience, continue to work on my consistency, continue to work on my discipline. That's how you get to wealth. That's how you be great. That's how you get to greatness in anything in your life. Not just building wealth. If you want to be great, if you want to pull this, see, here's the thing you got to understand, guys. All of us have greatness inside of us. All of us are very special people because there's only one of us created on this planet out of 8 billion people. It's only one Richard Fain. Out of 8 billion people on the planet, it's one Richard Fain. I'm very special. The good news for you is it's only one of you. So you're very special. What does that tell us? We have greatness, uniqueness inside of us, but we got to pull it out. So the people over there in the wealth builders, they've been using this phrase, don't buy the stock, buy the CEO. And I'm thinking to myself, my God, why didn't I come up with that? I love that. That's why I keep telling y'all, man, the wealth builders is where you need to be, man. If you want to get yourself around 1,100 people going in the same direction, listen, man, it's hard to be out here in the dark where you can't see. There's no visibility in front of you. It's just work every day, work till you drop, spend every dime you make, and hopefully when you get to retirement age, you got some Social Security large enough to at least take care of your basic needs. That's not greatness. We're better than that. That's not greatness, guys. Greatness is not us working for somebody for our entire life. And then when we do finally stop working, we get a little bit of money every single month to try to scratch out a living. And then some of us, even in our 70s, have to go back to work part-time just to make ends meet. That's not what we're here for. We're here for greatness. We're unique. There's nobody on the planet like you. But you got to start treating yourself like that. So the people over there in the wealth builders, they come up with all this stuff. Now, I learn something every day over there, right? So I love this notion of, don't buy the stock, buy the CEO. This guy right here, Jensen Huang, this guy is who I'm betting on. I ain't betting on the stock. Just like my folks over in the wealth builders tell me, hey man, don't buy the stock, buy the CEO. This comes from the wealth builders group, a group I started less than 5 months ago with almost 1,100 people, fastest growing financial community on Patreon. Fastest growing financial community on Patreon. They come up with this kind of stuff. Stay strong, stay long. I don't come up with this stuff, guys. Ain't that smart? They come up with it, but I get to use it on my YouTube channel. And they're okay with that, right? Because I'm sure they've learned something from me, and now I get to learn from them. Why do you think I started this thing? Why do you think I started this thing 5 months ago? Listen, guys, I make money a lot of different ways. I didn't start the wealth builders to just make money. I was already making money before I started the wealth builders. That's a very small percentage of money that I make. The larger percentage of money I make is not from the wealth builders, guys. It's not. Very small. But I started it because I wanted to learn from a group of people that I could trust. See, I can't trust everybody on YouTube that watch these videos. Y'all know that, right? Most of these people that watch these videos on YouTube don't know me. They don't care about me. I can't trust them. They can't trust me. But for whatever reason, they watch. Some of them convert and do something, become subscribers, but most of them don't, right? So I built me a community that I could trust and they could trust me. That's the reason I got the wealth builders, so that I can go to a safe place and be around people who think like me, who want to get to wealth, who love traditional investing, buy and hold, big boy blue chip long term, and who want to develop some financial behaviors that will help them reach every one of their financial goals and every one of their life goals. Because like I told y'all guys, discipline, consistency, patience, I don't care what area of your life, those three things, if you develop them, will make you better. It will make you better. So don't buy the stock, buy the CEO. That's what I'm talking about here with Jensen Huang. Nvidia CEO Jensen Huang says AI chip shortage is making his customers tense and emotional. But also what it's doing is it's creating this buzz around this new product he's coming out with in the fourth quarter. See, he ain't a dummy. They creating a buzz. They creating a buzz around something that the market tried to put a negative spin on. They tried to put a poo-poo on it. They tried to put it negative. But guess what he did? He flipped the script on them. He done flipped the script on them Wall Street aliens and these rest of these naysayers. He flipped the script on them on Blackwell, right? Nvidia boss Jensen Huang is starting to feel like Atlas, with the weight of the world, or at least AI bearing down squarely on his shoulders. The CEO and founder of the 2.9 trillion market value semiconductor giant spoke openly on Wednesday about the tension he's feeling, offering a glimpse into the pressure he faces to crank up the supply of microchips capable of training the latest AI systems like the successor to OpenAI GPT-4. Customers see his products from the perspective of a player in a zero-sum game. Each chip they receive means both an advantage for them as well as a disadvantage for rivals who struck out. Hong's job is to walk this tightrope, balancing the allocation of supply as best he can in order not to endanger client relationships. Does that sound like a company that's not finna go to the moon? When you got that type of market share and you got customers constantly knocking at your door for more chips. Why is that? Maybe because they make the very best chips in the world. See, you got to understand something about supply and demand, guys. You always want more demand than you got supply. Yeah, this guy knows that. See, he puts a little bit of sense of urgency around his customer base. You don't want to be sitting around here with a bunch of supply and a very little demand. No. That's not how business works. Business works this way. Let's have as much demand as we can, and we will just continue to monitor our supply, just so that we got more demand and supply. That keeps us relevant. And that's what he's doing, in my opinion. Delivery of our components and our technology and our infrastructure and software is really emotional for people because it directly affects their revenues. It directly affects their competitiveness, he told a tech conference hosted by Wall Street investment bank Goldman Sachs. What Wong actually meant by emotional is unclear, and Nvidia declined to comment further when reached by Fortune. I'm going to tell you what he meant. Now, y'all know I don't know CEO Wong, but one day I plan on being on his short list of people to know. That's my aspirations. That's one of my goals. May not happen, but I can still hope, right? I can still hope. I can still have goals. So let me tell you what I think he means. When he says emotional, he means, hey, listen, guys, we got the very best chips in the world. And everybody knows it. And everybody knows they have a chance to be first instead of last with our chips. Whether it be our hyperscalers, whether it be our mega caps, whether it be our sovereign countries that we're helping build out their AI platforms as well, whether it be the automobile industry, who is clamoring for our products as well. No matter which industry we're in, they want our chips. And they get emotional. They get a little upset. They get a little tense when they're not getting them on time. Because they got to be number one. Nobody wants to be number two. Last time I checked, nobody wants to come in second place. Not in the world I live in. The world I live in, either you first or you last. Now, I don't know what world you live in. Maybe in the world you live in, a participation trophy is good enough. That ain't the world I come out of. The world I live in, either you first or you last. That's how it is in this world of AI, cloud services companies, data centers, the internet, Why do you think all this stuff is possible? The internet. And we got about like a fingernail full of the internet. That's all we know. The internet is so vast and so much opportunity that these companies know that. See, these hyperscalers know that. We haven't even touched what we can do with the internet. Hyperscalers know that. They know that. And everybody behind the hyperscalers know that. The automobile industry knows that. Right? So Jensen is saying, listen, guys, we got the best chips in the world. There's nothing else, nobody out there that can touch us. Not right now, they can't. And our customers know that. And they just want this thing because they want to be first. They want to get it before everybody else. Amazon don't want to get chips after Microsoft get them. Microsoft don't want their chips after Google done got them. IBM Cloud, Oracle Cloud don't want their chips last. They want to be first on the chip order. When the Blackwell come out, who you think want to be first for the first shipment of Blackwell chips? Do you think any of those hyperscalers want to be the last on that list? They won't be first. That's why they're emotional. Because they know the difference between us getting our chips first and putting them into action gives us the advantage. See, I don't want to get my Blackwell chips in third quarter fiscal year 26 and Amazon get theirs first quarter or fourth quarter fiscal 25. No, that puts me at a disadvantage, guys. I can't have Amazon ahead of me if I'm Google. I can't have Microsoft ahead of me getting chips before I get chips. That's why they're emotional. Now, he ain't gonna go on record and say that. No, because he's a smart guy. He's a smart guy. He's a smart guy. He's not finna go on record and put no names in there. Why would he do that? But trust me, emotional, that's what he means. He knows what's at stake for these hyperscalers. I told you, the world I come out of, guys, if you ain't first, you last. Don't nobody care about no second place. Nobody don't care about who came. Listen, only thing people care about is what? Winning. Now, I know that's hard for some of y'all to swallow. I know some of y'all come out of this world of, oh, give me the participation trophy and we're great. No, it's all about teamwork. It's all about just being just a good sportsmanship. No, that's not the real world. Because if that was the real world, they wouldn't have a Super Bowl. If that was the real world, they wouldn't have, what do they have for them golfers? They bring the American players and then they bring the European players and they play, what's that, Ryder's Cup? They wouldn't have a Ryder's Cup. They wouldn't have a Ryder's Cup. They wouldn't have no Olympics. They wouldn't have no Olympics. If it was all about sportsmanship and everybody get a participation trophy, you think you're helping your kids, you're crippling them. Because that ain't the world they're going into. So you can keep on with this, oh, honey, it doesn't matter. You don't have to win. It's all about teamwork. Okay, when they get into the real world, it ain't gonna be nothing like that. I guarantee you, if somebody paying you to go to a job, they don't care nothing about how do you feel? No, what they care about is, are you producing to increase their bottom line? That's the real world, guys. Jansen knows that, right? But again, he's not going to call out one of his big hyperscalers. He's just going to say emotional. But I know what he means by emotional because I've been there at the highest level. I've been there at the highest level. So I know exactly when he says delivery of our components and our technology and our infrastructure software is really emotional for people. Now, he don't mean people. He really mean hyperscalers, right? Because it directly affects their revenues. It directly affects their competitiveness. He told a tech conference hosted by Wall Street investment firm Goldman Sachs. Big boy blue chip, by the way. Goldman Sachs, big boy blue chip. By the way, if you don't know who that is, go do a little research. And when I say research, I mean Google. What Hong exactly meant by emotional is unclear. I just gave y'all what he meant. So you can go out and do your own homework, but take my advice on this one. I just told you what he meant. And Nvidia declined to comment further. when reached by Fortune, because this is a Fortune magazine or Fortune, whatever they call themselves online. This is a Fortune article, right? But one thing is certain. Customers, especially the three main cloud hyperscalers. What did I just tell y'all? Guys, I'm telling you, man. I'm telling you, when you say people, you talk about hyperscalers. But he don't come out and say that now. He's a smart guy. But he understands, these hyperscalers understand one thing. If you ain't first, you're last. And don't nobody care about last place. When the last time you saw somebody win the New York Marathon or the Boston Marathon? Do you think the cameras hang around for the last person that finished last? Do you think anybody hang around for that other than their family and friends? Now, you got your family and friends, they'll hang around. But ain't nobody else hanging around. Everybody else going on about their business. You coming in 2 hours after the person that won the thing, nobody cares. Do you think anybody cares about Richard Fain and woe me and all the pity on me? Nobody cares. Nobody cares if I sit on here and tell, oh, golly, guys, guess what, guys? Blah, 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 guys. Please, guys, drop it down in the comment and give me some encouragement, guys. No one cares about that. People got their own problems. They don't care about it. Hyperscalers don't care about that. All they want to know is when I get my chips. And I don't want to get my chips last. I want my chips first. I do not want Google getting their chips before me if I'm Microsoft. If I'm Microsoft, I do not want Amazon getting their chips before I get my chips. I want my chips first. And that's where the stress level comes in. That's where the emotions come in, because you got these three big old gigantic hyperscalers, all $2 trillion plus companies on your back. Just giving it to you the straight, guys. This is how the world is. Especially the three main hyperscalers: Microsoft, Google, Amazon, which each require a vast supply. See, let me just go back to this real quick. Y'all see why this thing in green for Nvidia? Because of that last sentence I just gave you. Now, don't get me wrong. The Wall Street aliens are going to try and use that to drive the stock down because they are greedy and they want to make money. And I ain't mad at them. I'm not mad at the Wall Street aliens because they do what Wall Street aliens do. You can't be mad at somebody because they do what they do. You know what they do, but you get mad when they do what they do. Don't get mad when they do what they do. Guess what you should be doing? Do what you do. I know it's a little confusing. Some of y'all missed that. Don't get mad at people or companies or aliens when aliens do what aliens do. Question is, will you do what you need to do? They gonna do what they need to do. Question is, will you do what you need to do? I don't know. So here we go. The three main cloud hyperscalers: Microsoft, Google, Amazon, and let's throw in IBM Cloud and Oracle Cloud. That rounds out your 5 hyperscalers. Your 3 main ones: Google, Microsoft, and Amazon. But let's throw in IBM Cloud and Oracle Cloud. Those are your 5 hyperscalers. If you don't know what that means, go out on the internet and do a little research. And when I say research, I mean Google. Just Google it. They'll tell you exactly what they do and why they're called hyperscalers, which each require a vast supply. That's why the stock price is going up, guys. See, Wall Street aliens I keep telling y'all, the Wall Street aliens can manipulate this thing, but they're not going to stop this thing, man. You know why they're not going to stop it? Right here. Which each require a vast supply, realistically have nowhere else to turn. That's the truth, baby. They got nowhere else to go because Nvidia makes the best chips in the world. Nvidia controls 90% of the market. So where are they going? Oh, they'll just go to Broadcom. Oh, they'll just go to AMD. Not in the next 3 to 5 years. Now, I don't know what Broadcom will do and AMD will do in 3 to 5 years, but in 3 to 5 years, they're not gonna catch these guys. So guess what? If I'm a hyperscaler and I'm spending $50 billion that Google spent, I think I got that in here. I'm gonna tell you exactly what these hyperscalers are spending because people are worried about revenue. And the crazy part about it is that only makes up about 45% of Nvidia's revenue is from hyperscalers. So who makes up the other 55%? That's what you need to be researching and figuring out, guys. Don't be worried about the hyperscaler revenue. That's gonna continue. But you need to be diving in to figure out who are the other 55% where they're getting their revenue from. That's why the stock price is gonna go green. Yeah, it's gonna go red again too, I know that. But ultimately, you can't stop it. I keep telling y'all, you cannot stop this. You can't stop progress when it's already in motion. The Wall Street aliens gonna try, but they're not really trying to stop it if you really understand what the Wall Street aliens are doing. They're not trying to stop it. They're just making money where they make money. This is what they do. They manipulate us in any shape, form, or fashion that they can to make money. They're not trying to stop AI from happening. They already know AI gonna happen. But in the meantime, if they can manipulate you and make money in the process, they do it. That's what's happening. They don't stop it. You can't stop this. You can manipulate it to make money, but you can't stop it. As founder and CEO, Hong takes his responsibility to key customers personally. In April, he hand-delivered the world's first DGX server equipped with its upgraded Hopper series AI training chip. The new H200 to OpenAI Chief Executive Sam Altman and President Greg Brockman. And they got on X and took a nice little photo of it. So if you want to go out there and find that, go on X and you can find that nice little photo dated April. Oh, I'll show it to you. See, I can put it on the screen too, guys. Y'all don't think I got no technology. Look at my technology. iPhone technology, baby. You can see that on the screen. Come on now. Y'all give me some props. Somebody give me some props for technology. All right, let's keep moving. Let's keep moving. And in his quest to topple OpenAI from the industry summit, Elon Musk recently revealed plans to purchase, oh my goodness, 50,000 H200s over the next few months to double the compute at his XAI training cluster in Memphis, where his rival AI model Gronk 3 is currently in training. Elon Musk finna buy 50,000 H200 chips. And guess who he chasing? OpenAI, baby. I keep telling y'all, man, you can't stop this. You can't stop it. And again, Wall Street is not trying to stop it. Wall Street just using any manipulation tactic they can to make money. Oh, Wall Street won't ever let that happen. I'm not going to invest in that because Wall Street said they're not going to let it happen. See, this is how they manipulate you. They manipulate you and thinking they got anything to do with this. They don't, man. These guys don't run these companies. These people sit somewhere on a computer, on their phone, on their laptop, and make trades, man. They don't run companies. And you think they can stop something. They're not going to stop anything. They're going to bleed this thing dry of every drop of money they can get out of it, and then they're going to jump on the bandwagon. Some of us just don't understand that, though. So here we go. Our fundamental competitiveness depends on being faster than any other AI company. This is the only way to catch up. This is what Elon Musk said. explaining a recent social media post. When our fate depends on being the fastest by far, we must have our own hands on the steering wheel rather than be a backseat driver. You get what he's saying, right, guys? Either you're going to drive this thing and be first and be in control, or you're going to be one of them people back there in the back, sitting in the back, ain't in control of nothing. You're going to either be in the driver's seat of this thing. This is Elon Musk, baby. Driver's seat, or you're going to be back there with no control over nothing. You just get the scraps. There y'all go. Boop, throw that back there to you. I'm up here in the driver's seat. Elon say I'm going to be in the driver's seat. This is what Elon Musk is saying. So guess what he's going to do? I'm going to go out and get these 50,000 H200s to make sure I'm in the driver's seat. That's where the revenue's coming from, guys. You can't stop this thing. I keep telling you. And please understand, Wall Street aliens are not trying to stop this thing. They're just manipulating you because they can. That's all they're doing. They know they can't stop this thing. I guarantee you, they'll get on board. Matter of fact, they're already on board. They're just manipulating you to make money. Right? That's why he was willing to risk the ire of Tesla shareholders after allocating Nvidia chips to xAI that should have gone to training the car maker's self-driving software system, FSD. It also explains how xAI, which is trying to compete with OpenAI. See, Elon ain't no fool either. This guy ain't no dummy, man. This guy's not a dummy. But my point here is when you have that type of demand, guys, for your product, you can't stop this thing, man. I don't care what these guys over here say. You can't stop it. So what does a guy like me do? See, I know all of this. So what do? I get me 11,200 shares and I just chill. I don't worry about it. I ain't sold not one of them. 11,200 shares and I just chill because I know it's coming. I don't know when, but it's coming. Especially when I read stuff like this where you got your major hyperscalers emotional. Why would a hyperscaler be emotional about a product? Why? Because they need it. Then you got a guy like Elon who will defy his shareholders or his board of directors. For his main company, he will defy them and redirect them chips to a new project, xAI or Grok 3 or whatever they call it. I'm not an expert on that, but I'm just telling you it's a competitor to OpenAI. And he redirected, let me just, here it says right here, that's why he was willing to risk the ire of Tesla shareholders after allocating Nvidia chips to xAI that should have gone to training the car maker's self-driving software system, FSD. It also explains how xAI was able to bring online the largest single compute cluster in the world, powered by 100,000 Nvidia H100 GPU in the span of just 3 months. Y'all help me out. That's pretty dang on a lot of chips. That's a lot of chips, man. And guess what? He got another 50,000 H200s on the way. So he already got 100,000 H100s. Now he's stepping up to 50,000 more H200s. Okay, y'all will catch on at some point. But I'm telling you, this thing is not slowing down. Whether Musk is a preferred customer is not known, but Nvidia has revealed that just 4 data center clients were responsible for nearly half of its Q2 top line revenue. We're gonna get to that in a second. Hopefully. Golly, I'm running out of time here, so I better stop getting so long-winded. Let me get this thing wrapped up. If we could fulfill this is what Wong is saying now. Here's what the CEO of Nvidia is saying. Remember what I said. Remember, okay, I'm taking credit for it, but really what the wealth builder said. Don't buy the stock, buy the CEO. That comes from the wealth builders, from the fastest growing financial community on Patreon. If you're not part of our wealth building group, if you're not part of the wealth builders, guys, I don't know what you're doing. You got to get to the wealth builders and get this information, man. Get yourself immersed in 1,100 wealth builders who are all sharing ideas, all sharing intel, all sharing info. Come on, man. Turn on the light bulb. You're in the dark right now. You're out here trying to do all this by yourself. That's why you're scared to death half of the time. You can't invest because you're scared to death half of the time because you got no information. Get over here to the wealth builders, man, and try it out. All you got to do is go down to the second link in the description box of this video and click on the Richard Fain Millionaire Mentor website, www.richardfain.net. And once you get there, click on that membership button, that join button. Get yourself over to the wealth builders. Get yourself wrapped around almost 1,100 people going in the same direction you're going in that can help you. Or you can stay over here in the dark, or you can come to the light. That's up to you. Let's keep moving. Here's what Wong said. If we could fulfill everybody's needs, then the emotion would go away. But it's very emotional. It's really tense. Hong told the Goldman conference on Wednesday. We've got a lot of responsibility on our shoulders, and we try to do the best we can. They carrying the whole artificial intelligence movement on their shoulders, guys. Yes, they are. Whew. My 11,200 shares are in good shape. I don't care with the short term, guys. I don't care about the little bubbles and the little fluctuation and volatility in the short term. But can you imagine when you got, matter of fact, you got 4 of the largest companies in the world, 4 of the largest companies in the world chomping at the bit for your product. 4 of the largest companies in the world. All from America, by the way. Just a little FYI. Here we go. Hong is not being facetious, whatever that means. At the end of last month, Nvidia posted fiscal record quarter results that Winbush or Winbush or whatever, techno analyst Dan Ives called nothing short of the most important tech earnings in years. One of the core concerns that both investors and customers were most keen to hear addressed included an additional information on the rollout of and the ramp up of Blackwell. That's the next generation of chips after the Hopper. Remember, Tesla already bought 100,000 of the Hopper 100. They got another 50,000 of the Hopper 200 coming. Now you got this Blackwell thing coming out. That's better than all of that. That's coming out, right? The series for the AI chips after Hopper following reports of delays. Now, he talked about this during the conference. So let's hit that a little bit and then we'll bounce out of here. We'll bounce out of this and get to the main thing. During the investor call, Hong confirmed changes had to be made to the production design. We already know all of that. But he also went on to say several billions of dollars worth of Blackwell processors before this fiscal year end in late January. So he's saying they're going to still have billions of dollars worth of revenue for Blackwell before January 31st or January 30th, whenever their fiscal year ends in January. Unlike integrated device manufacturers like Intel or Texas Instruments, Nvidia outsources all semiconductor fabrication to dedicated foundries that specialize in production technology. Primarily TSMC, the Taiwanese giant, leads the industry when it comes to efficiency, minimalizing transistors, the building blocks of the logistic chips printed on each wafer. That means, however, that Nvidia cannot quickly reply to demand spikes, especially since these chips go through months of complicated process steps before they are fully fabricated. There you go, man. Now, you do know TSMC is getting ready to ramp up 60% more production. And I think Nvidia represents about 11% of their revenue. So they're getting ready to ramp up another 60%. And then Nvidia represents about 11% of their revenue. Now, that'll probably go up some. But there are some restraints for Nvidia since they don't go start to finish on their own chips, like Intel or Texas Instruments or some of these other people. They go to a foundry in Taiwan, and then sometimes at the mercy of how fast they can create this stuff. Let's do a temperature check before we move on. 118.76. So, you know, got to 120, rejected it, back down a little bit. We don't know where this thing will end up at the end of the day, but for right now, it's nice to see it in the green. Let's move on. Let's go ahead and move on, and we're going to talk about why Nvidia bounced or popped, because I know some people have already emailed me and asked me about that. Well, Richard, why did this thing move? Let's talk about that. Shares of Nvidia were moving higher today. Now that was yesterday. Moving higher yesterday on several news items, including a cooler than expected inflation report, right? So we had CPI came out yesterday and it was cooler than expected, right? And then they did a presentation at Goldman Sachs, which we just talked about a little bit. They had Goldman Sachs had a conference yesterday morning, and news that the federal government could allow it to export chips to Saudi Arabia. That was one of the things that came out of that the U.S. government will allow Nvidia to export chips to Saudi Arabia. That's big news. Because remember, early on in the year, the news cycle was saying, you know, the United States was going to poo-poo all of that. They're going to put restrictions on these companies like Nvidia so that they can't be sending out technology to China and all these other places that don't really like America. That was the news cycle in the beginning of the, middle of the year, probably April, May. You started seeing that rolling out about, oh, golly, U.S. government is going to put some stricter restrictions in place, not allowing companies like Nvidia to send out this technology to countries that, Now you hear through this conference that the federal government could allow Nvidia to export chips to Saudi Arabia. As a result, the stock closed up 8% on news. Chip stocks largely jumped as well on the inflation report, with the iShares Semiconductor ETF up 4.6% on the news, and NASDAQ Composite up 2.2%, which we talked about that yesterday. Now, we all know CPI did good. We all already also know that the Federal Reserve is going to reduce interest rates, right? We already know that. Now, it says here, the Federal Reserve is expected to cut rates. We know that next week. Nobody knows how much. Everybody's saying 25. Some people are saying 50. 50's off the table, though, because we got these inflation reports that although they came in cooler than expected, certain areas of the report did jump a little bit, like in core. CPI yesterday, core month over month didn't meet expectations. It was actually, it was higher than expectation. So that kind of squashed this whole idea of a 50 basis point. No, that's not going to happen. 25 basis point will happen. So ideally, interest rates will come down while the company remains strong or even gets stronger. That would be the best scenario for Nvidia, as lower rates make growth stocks more valuable. I kind of try to tell y'all that. I keep telling y'all guys, when interest rates come down, stocks going up, especially tech. Why? Because now more people can borrow money to put into their tech infrastructure. They can borrow it cheaper. When the Fed funds rate starts going down, companies can borrow money cheaper. And they're going to take that borrowed money and put it into expansion. And part of that expansion is AI infrastructure build out. Whether it be automotive, whether it be hyperscalers, doesn't matter. Everybody, whether it be sovereign government, it didn't matter. Because normally how these sovereign governments work is the sovereign government itself is not the one they're not the one like connecting with you. It's a company or companies inside of that sovereign government that the sovereign government has contracted with their companies, and then these companies come to Nvidia. That's typically how it works. It's not Nvidia going directly to the sovereign country. Not that they can't, but it's typically each country will pick companies inside of their country to say, okay, you act on our behalf and we're going to contract out to you to build out this thing for us. Why? Because they don't have no expertise to build out nothing, most of these countries. Who they got on their cabinet that knows anything about this, that can build out an AI infrastructure? They don't. So what do? They go find companies and they contract with companies to build it out for them. And those companies go to Nvidia. That's basically how it works with the sovereign governments, right? So interest rates come down, like I was telling you. Interest rates come down, tech stocks or growth stocks go up because it's cheaper to borrow money to invest in growth. That would be the best scenario for Nvidia. As lower rates make growth stocks more valuable, and it should encourage borrowing for investment in artificial intelligence. I just told you that in a nutshell. Just told you. As rates come down, guess what these companies are going to do? And these sovereign governments and everybody else who wants AI, they're going to go borrow this money. And they're going to take that borrowed money and they're going to buy chips. And guess who owns 90% of the market share for these chips? Now, that don't mean AMD, Broadcom, all the rest of them don't get their share. They do, because everybody can't afford NVIDIA's chips. Everybody can't get on the list to even get chips. Remember, you got hyperscalers first. So the hyperscaler is going to get all their chips taken care of first. And then if you're number 100 back here in a company that's number 100 back here, you ain't getting no chips. So you're going to have to go to AMD. You're going to have to go to Broadcom. You're going to have to go to ARM. You're going to have to go to some other company, some other semiconductor, because you ain't on the list. Because the first people going to get service are the hyperscalers and the mega caps like Tesla, Meta. They're going to get service first. Whatever's left over, you might be able to get something. If not, you got to go to another semiconductor. And that's how these other semiconductors make money. Because everybody can't afford, even if they could afford it, they can't get chips. Because I've already told you that the mega caps and the hyperscalers are in line first. Period. All right? So let's keep moving. So as interest rates come down, who benefits? Growth stocks. So if I'm a person out here trying to build my wealth, I'm trying to build my wealth and I'm trying to figure out, well, where do I want to put this money? Where do I want to put this money when it comes to building wealth? Do I want to go put my money in some retail company that already, they're not going to grow. They're not a growth company. Maybe they're a value company. Maybe they make a lot of money, but they're a value company. So it's not going to, the stock price is not going to 3X, 4X, 5X, or 6X. That's where I make my money. Or am I going to go find me a growth company? Since interest rates are coming down, and I know the correlation between interest rates going down and growth stocks going up is very, very good from a historical standpoint, where do I might want to put my money? Since we're getting ready to have this interest rate, these 200 basis points of interest rates that are going to come down over the next year and a half, going from 5.5 Fed funds all the way down to 3.5 Fed funds over this next year and a half. If rates go down and historically speaking, growth stocks go up in value, they become more valuable because people can borrow money and invest in growth, AKA artificial intelligence. Where should I be putting my money if I want to maximize my growth? I don't know. You got to answer that question, but I kind of laid it out for you in the article. They laid it out for you. I can read it one more time for you because I can't tell you the answer. I can't give you that answer, but they've laid it out for you, what you should be looking for, right? And how do you get that? You got to get down in the description box and click on that Moomoo link. Get yourself a Moomoo brokerage account set up. They're going to give you up to 15 free stocks when you open it. Put $100 in it, they give you 5 free stocks. Put $1,000 in it, they give you 15 free stocks, publicly traded companies. And now guess what? You're in position before next week, because once these rates start coming down, which they will, guys, they're coming down. Now all of a sudden, ooh, okay, I can go out and find me some really good growth stocks that could be in an advantage when rates come down. Okay, just saying. That would be the best scenario. Here we go. Ideally, again, get down in the description box, click on the Moomoo link. Don't leave out of here without getting that Moomoo link clicked on and getting yourself signed up, guys, because I'm telling you, at some point, these rates coming down. And when they do, historically speaking, growth stocks go up in value. So I can pick all these things up at a discount right now in anticipation, if history is correct, I can see some upside here in the next year and a half. Significant as rates come down. Here we go. Ideally, interest rates will come down while the economy remains strong or even stronger. Well, why would you say that? Well, think about it, guys. We already on pace for the soft landing. That's tucked in. The jumbo jet gonna land, and it's gonna land pretty smoothly. It is. The jumbo jet is gonna land smoothly. We're not gonna have no problem. We're gonna have a soft landing here. The reports are in. CPI for August came in great. PPI, little higher, but still nothing to be alarmed about. We're going to get the 25 basis points. We'll get 75 for the rest of this year, and then we'll get another 125 next year. So 200 basis points coming down. Coming down. So put yourself in position, guys. Put yourself in positions. Ideally, interest rates will come down while the economy remains strong. Is the economy strong? There's some questions with the labor market. But again, last quarter, Q2, we had a 3% GDP. What it will do in Q3, I don't know. But interest rates coming down, right? So ideally, interest rates come down, economy remains strong. That would be the best scenario for Nvidia, as lower rates make growth stocks more valuable. If I'm looking to grow wealth, and I know rates are coming down, and history says growth stocks become more valuable, come on, guys, put 2 and 2 together. And it should encourage borrowing for investment in AI infrastructure, meaning spending on NVIDIA components. Speaking at Goldman Sachs Communicata conference, NVIDIA CEO Jensen Huang didn't make any major news, but touted the company's technology and the future of generative AI, noting the company's advantages, including its software libraries for application like autonomous driving and climate tech. He also added, demand is so great that delivery of our components, our technology, infrastructure, and software is really emotional for people because it directly affects their revenue. It directly affects their competitiveness. We talked about that. Finally, according to the report from whoever, the federal government is considering permitting Nvidia to export advanced chips to Saudi Arabia, which it would use to train advanced AI models. While Saudi Arabia isn't a huge market, the loosening of export rules would benefit Nvidia and could lead to other markets opening. Tailwinds seem to be forming for the company as falling interest rates will support investment and its valuation. It's also set to release the Blackwell in Q4, and its top customers, including tech giants like Microsoft, Meta, Alphabet, have all said that investing in AI infrastructure is a top priority. There you go, guys. There you go. There's a little bit of an update on why the stock bounced. Main reason is interest rates coming down. And historically speaking, when interest rates come down, growth stocks increase in value. And it don't hurt that you got strong clients like they have. It doesn't hurt that you have a over demand and you don't have enough supply. So there you go. So now you know what you're gonna do with it. Now that you know, the question is, what are you gonna do with it? What will you do with it now that you know? He also pretty much said they're basically sold out of everything, guys. Pretty much said they're sold out of everything. Sold out. Which is crazy to me. But they're sold out from a chip standpoint. Here's what I wanted to run you guys through. Who are Nvidia's mystery customers and what are they spending? You'll already know who the big customers are, but what are they spending? This is the thing I wanted to share with you guys, and then we're going to wrap this thing up. Oh, one more thing and then we'll wrap it up. Microsoft, check this out. Microsoft spent $55.7 billion on Capex during its fiscal 2024, which ended June 30, most of which went toward data center infrastructure and chips. The company says it plans to spend more in fiscal 2025. This is what Microsoft spent. Amazon's Capex during the first half of 2024 alone was $30.5 billion. And it plans to spend even more in the second half to support growth it's seen in AI. Meta, here's Meta. Meta expects Capex to come in somewhere between $37 and $40 billion for 2024. And it forecasts significant growth in that number in 2025 to support its AI projects. Meta's Llama 3.1 LLM was trained on 16,000 H100s. Who makes that? Nvidia. But the company plans to expand its capacity to 600,000 H100s equivalent by the end of this year. So Meta going from 16,000 H100s for its old large language model to over 600,000 H100s for the new language model 4. Language model 3 only needed 16,000. Language model 4 needs 600,000. Who do you think those going to? Oh, that's right. It's Nvidia because they're the one that make the H100. Oh, my bad. Sorry, I missed that. Sorry. Oh, lost my train of thought there for a second. Okay, I'm like, who? Oh, that's right, Nvidia. Alphabet. Alphabet spent $25 billion on Capex in the first half of 24, and it expects to spend roughly the same in the second half. I told y'all guys, these hyperscalers and these mega caps are going to spend $300 billion this year, 2024. Okay. Tesla expects to spend a total of $10 billion on Capex in 24 as it works to bring a cluster of 50,000 GPUs, H200, online to advance the development of its self-driving software. Considering that those companies intend to maintain the same infrastructure spending, or in the case of Microsoft, Amazon, and Meta, increase it, Nvidia's revenue pipeline looks robust for at least the next year. That's crazy. That's crazy. All right, let's get to the last one. And this is the price target. Nvidia's stock forecast and price target. So you got over 42 ratings, guys. 42 ratings. Top analysts. 42 of the top rating analysts. 39 give it a strong buy. 3 give it a hold. Goose egg on sale. Nobody is saying sell this thing, man. All right, what's the price target? Let's see. Let's see what the old price target is. Let's see. Price target is going to be in that 153 range, guys. From 150, it'll go from 100 all the way up to 200, but the price target, the median, the average price target is 153. So it could go up to 200, it could go as low as 100, but the average price target, when you average out those 42 analysts, is 153 within 12 months. Where do we sit today? We sit right now at 118. So some of y'all might be saying, well, golly, man, 118, I'll just wait till it drops down to 105. That's a great strategy. You can use that strategy. It may work. It may work. I don't know if it'll work, but it might. It may go back down to 100. It may go back down to 90, and perfect. You're in. Some of you might say, well, you know something? I really believe in the long term of this thing. So 118 is a bargain if over the next 12 months, it can hit its average. I don't know, guys. You got to figure that one out, right? You got to figure it out. What I'm saying is, for me personally, when I was buying heavy, building myself up to my 11,200 shares, my price range for buying this stock, guys, was $100 a share all the way up to $120 a share. So my 11,200 shares fall somewhere between I apologize, $95 a share up to $120 a share. $95 a share up to $120 a share is where my 11,200 shares are at. Now, some people might say, well, golly, man, you're probably in the green. Why not go ahead and just dump it and wait for it to fall down again? Yeah, that's a strategy. I could do that. But see, the picture that I'm looking at, it has an 8-figure after it. This little stuff right here is fine, but I don't want to take the chance of bailing out on a lot of the shares that I bought at $95 a share to get a small profit right now, and hope I can get back in at 95. Probably, maybe, I don't know. That's not a risk I'm willing to take. Others have taken that risk and it's worked out for them. And maybe it will work out for the next person that takes that risk. For me, though, I just like the patience of knowing I got my shares, I'm locked in, I'm thinking 10 years from now, and I'm good. And then I continue to take my money in dollar cost average in ETFs that actually track the S&P and that track the information technology sector. And the MAG 7, I buy them individually with 20% of the money that I invest. Already got my 11,200. Now, here's the sweet part about it for me. If Nvidia does fall back down under $100 a share, let's say it gets to 95 or 90 again, which it could. Nobody has a crystal ball, right? Then I go back into the war chest, pull money out of the war chest, buy me another 8,800 shares so I can get to Nancy Pelosi level. You remember that old commercial back in the day where it says, be like Mike? Michael Jordan, when he was very popular, everybody, be like Mike. Nike, I don't know if it was Nike, but it was somebody. Be like Mike. Well, I like to change Mike out of that and be like Nancy. Take Mike out of there and be like Nancy. Be like Nancy. That's what I'm trying to do. I'm trying to be like Nancy. I'm trying to get me 20,000 shares of this thing and just sit on it. So I'm going to be like Nancy. Instead of be like Mike, be like Nancy. So that's what I aspire to do, to get me 20,000 shares of this thing and just sit on it for the next whatever. I don't care how long it takes. I'm just going to sit on it until it realizes what I believe it can realize. And that's somewhere in that $500 to $1,000 a share at some point over the next 3 to 5 years. Now, it ain't going to do that today. It ain't going to do it tomorrow. It won't do it next year. But at some point, I think there's an opportunity for this thing to get itself to $500 to $1,000 a share. And that is what I'm in this game for. I'm not in the game for anything else other than that. That's what I'm in this game for. As long as the company doesn't have any performance issues. As long as it doesn't have any performance issues, I'm in it for that. That's the only thing that I will pull the parachute cord, is if this thing have performance issues, which, guys, I just walk you through. I just walk you through in my opinion, guys, for a guy like me, I just walk through everything I need to know about the revenue, because that's the key. Where's the revenue coming from? How can they keep these numbers up? Now, don't get me wrong. Every quarter won't be triple digit, guys. As you scale this thing up to 200 billion in revenue, 400 billion, you're not going to do triple digit numbers, right? You're not. So I don't have that expectation of the company. Nobody else has that expectation, but they will try to propagandize you like they do have that expectation. They don't. Wall Street aliens don't have that expectation. They've been doing this a long time. They know as you scale up revenue, your beats percentages get smaller. They know that. But they'll propagandize you to think, oh, they're not going to do triple digits if they go 300 billion. They ain't going to do triple digits. That's not good. That's how they propagandize you. I done been in business. Listen, man. Listen. The most important thing about a company is what? When it comes to their revenue, when it comes to their profitability, what's the most important thing? That they do better than they did last year. That's it. That's it. Give me a company that just does better in top line revenue, bottom line profitability every single year. Just do better than they did the year before. That's a great company. This notion of you got to do 50 and 80 and all this 100 and 200% every quarter, or we're not going to buy your stock. That's just hogwash. That's all manipulation to get you to think it's unusual. Oh, golly, they didn't do 100% of something. Listen, man, y'all better go out and do some research, man. Listen. The most important thing when I invest in a company, I want them to do better than they did last year in the key metrics: top line revenue and profitability. That's all I care about. All the rest of that crap, I don't care about it. All I care about is, are they increasing their revenues year over year? And are they taking more to the bottom line year over year? All the rest of that stuff they talking about don't matter. If they do that consistent enough, the stock price gonna go up. It just is. Keep top line revenue increasing. I don't care if it's by 1%. Who cares? I don't. So just keep that in mind, guys. When you're out here researching, stop listening to these Wall Street aliens trick you, because all they're trying to do is trick you and confuse you. So don't let them do that. Think about it. If I own my own company, let's say RF Financial Consulting, that's my company. And I look at my revenue from 2023. I look at my profitability from 2023. And I say to myself, as I'm forecasting for 2024, okay, Richard, you did XYZ top line, you did XYZ bottom line. What do you think you can do this year? Well, golly, man, if I can do 10% better than I did last year, that's a win. If I can do 10% better than I did last year, do 10% less on my expenses, do 10% better on my net profit, that's a good year. That's a good year. Oh, golly, you only did 10% better this year. We don't know if we want to lend you any money. That ain't how banks work. It's not how they work, guys. I guarantee you, if you go into a bank and you got good financial records that show them year over year, you do better every year, that's all they want to see. What they don't want to see is you do better in 2023 than you did in 22, but 24 you're trending down to do worse. They don't want to see that. Ain't nobody going to lend you no money if they see that. Because the trend is not your friend. The trend, either it's your friend or it's not your friend. The trend is up. I don't care if it's by 1 penny. The trend is your friend. If I did $10 more than I did last year, the trend is my friend. If I did $10 less than I did last year, the trend is not my friend, and they're not going to lend you no money. Nobody want to lend money, well, not in our scale. Nobody's going to lend money to a company that's been around that just continues to lose money every year. Normally, that doesn't happen. Now, maybe it's different in other areas of business where, people see value in the infrastructure, and they know if the company fails, they can just break the company apart and sell off parts of the company to people and make money off of it. People do that too. They don't care about the revenue. They care about the assets. They care about the IP. They care about the hard assets. They already know, they've done an evaluation of the company and the assets and said to themselves, listen, we'll lend these guys this money, but if they don't come through, we're going to take the company, we're going to split that sucker into 8 pieces, sell it off, and we're going to make a lot of money. So we're going to root for them not to win. So we can dismantle the company and sell it off in pieces, and we'll make our money that way. But that's a whole different ballgame, guys. Normally, companies that do well and make money year over year are good companies. This notion of you got to do 100% every time you come up to the earnings report. But this is the propaganda they use on us to trick us, to keep us on the sidelines so we don't build no wealth. We stay in the dark. We're afraid all the time. We're confused all the time. This is what they do to us. $153 a share over the next 12 months. The question you got to ask yourself is, at the present time, at 118, there's quite a bit of upside. There's quite a bit of upside. And the question is, are you okay with that upside? Yeah, so your lowest price is $90. Your highest priced is $200 a share. Average is $153. That's a lot of upside at $118 a share. That's about a 29% upside right now. It's a 29% gain if that stock price goes from today's price to 153 in 12 months. That's what you got to ask yourself. Is that something that you're willing to consider? You got to answer that question. If you want, get down in the description box, click on that Moomoo link, open up your Moomoo account today. The good folks at Moomoo are going to give you 15 free stocks if you decide to put $1,000 in your brokerage account so that you can go hunting. It's hunting season. Matter of fact, it's dip season in a lot of cases. And all of y'all might say, well, that ain't no dip. It's 118 a share. It's in the green, but you got to understand where it came from. Remember, less than 2 weeks ago, it was 128, 130. So in my opinion, it's still dip season. It ain't deep dip season, but it's dip season. Again, not your financial advisor, not trying to tell you what to do, but I'm just trying to give you a little bit of something to be able to think about as you try to figure out, how do I continue to build wealth in these last 4 to 5 months of the year, last 4 months of the year? How do I build some wealth? How do I continue building wealth and not sit on the sidelines scared and afraid? All I'm trying to walk you through are options, guys. And in order to take advantage of these options, you got to be disciplined, you got to be consistent, and you got to be patient. Please develop those 3 financial behaviors if you don't do anything else. Develop them. They're going to serve you well in life. But again, get down to that description box, click on the Moo link, open up your Moo account today. Good folks at Moo are going to give you up to 15 free stocks. When you open up a new Moo brokerage account, you put $100 in there, they're going to give you 5 free stocks. You put $1,000 in there, they're going to give you 15 free stocks. Guys, go get that free stock. Go get that free money. And then if you're not comfortable with the brokerage app and this is my first time, Richard, I don't know nothing about these brokerage apps, send me an email through my website, www.richardfain.net, which is the second link down in the description box. Send me an email and say, hey, Richard, I opened my Moo account. I funded my Moo account. I need you to send me those 2 tutorial videos so I can learn how to use the Moo brokerage app. And I'm going to send those out to you ASAP, Rocky. And then if you want to, I can send you my wealth transfer blueprints that outline my 50-30-20 strategy for buying paper assets and building wealth over long term. I can send you that video as well that'll walk you through exactly what I'm buying in my 50-30-20 investment strategy that I've used for a lot of years, guys, to build a lot of wealth. Again, not a financial advisor, not trying to tell you what to do, just giving you what I'm doing. So if you do want to copy the plan, it's right there in color for you. That's it, man. That's all I got for you. Oh, last thing. Make sure you join the Wealth Builders, guys. Get over there to the website and join the Wealth Builders. Don't cheat yourself, treat yourself. Get over to the Wealth Builders. Join the fastest growing financial community on Patreon. Do yourself a favor and get around people who got your back. I keep telling y'all, I learned so much from these good people over there every single day. They don't even know some of the stuff that I learned from them, some of the articles that they drop that I read. And then I go in there and I share it. I come back on the YouTube channel and share it with you guys because I know you're not over there. Some of you are, but a lot of you not. No reason why you should be out here in the dark by yourself with no flashlight, no candle, just in the dark, trying to figure this out by yourself and you're struggling. Get yourself to some light. Get yourself over here in the light. Get out of the dark, come to the light. Wealth Builders, fastest growing financial community on Patreon. Go to my website, www.richardfain.net today and join. Hit that join button. Hit that membership button. What's up, Tracy? I see you rocking with me. Hey, Tracy, thank you so much for stopping by. I see you, Tracy. Wealth Builder. Wealth Builder. I see you, Tracy. Thank you so much for stopping by. And I know I got other Wealth Builders in here, but I see Tracy with all the, the colorful stuff she be having in her little posts and stuff. So I recognize her. Everybody else can't really recognize, but I can recognize Tracy, and she's in here rocking with her boy. So thank you, Tracy. I appreciate you. All that you do and all that the rest of the Wealth Builders do, I appreciate them for creating a safe space for me and those that are like me who want to get to wealth. I appreciate the safe space. Well, thank you, guys. I'm out of time. I got to go. I've kept you guys past my 90-minute little, hopefully you got some good meat and potatoes on the 900-pound silverback gorilla. I wanted to get you through why the stock was bouncing, give you some real concrete reasons, in my opinion, though, why it's bouncing. Also give you some real concrete information on revenue forecast, telling you what the big boys are spending, what they've already spent, what they will be continuing to spend. I also wanted to show you that sense of urgency, that emotional sense of urgency these big, gigantic companies have because they want to be first in line to get the best chips in the world. That's that good old supply versus demand. You always want, as a good business, to have more demand than supply. That's a good business. That's a good technique. That's a good strategy if you're a business. You never want to be on the flip side of that thing where you got too much inventory and not enough, or too much supply and not enough demand. You don't want to be on that side. You want to be on that other side where you got more demand than you got supply. That's where you want to be. And guess where Nvidia is? That's where they are. So I just wanted to walk you guys through some of the reasons why I invest in this stock, and I will continue to hold my position and hopefully add to my position in this stock. That doesn't mean it's financial advice. It does not mean I'm trying to tell you to go buy it. It does not mean I'm trying to tell you to sell anything. You do whatever you've been doing if you want to. I'm here to be an information giver, a truth teller, according to my opinion. That's all I'm here for. I'm not here to try to tell you what to do because I'm not a financial advisor. Nowhere near it. I got no credentials other than doing this for 30 years on my own and building a certain level of wealth that gives me credibility to be on this channel telling people my opinion. That's all it gives me. So I appreciate y'all rocking with me, man. Have a rest of a great Thursday. Please do, no matter what part of the world you live in. Remember this. 2 things you control every day of your life. That's your attitude and your effort. Nobody else controls those things in your life but you. There's a lot of things outside of this household that I can't control. But inside this household, I control 100% of everything. Outside, can't control all that. But I can control everything inside of these 4 walls. I also can control my own attitude and my own effort. I also can control what? Discipline, consistency, patience. What else can I control? 4 financial principles. Live on less than what I make, live on a plan, stay out of consumer debt, save and invest. So you got 7 things, guys, you need to work on and get really good at. Those 7 things. Live on less than what you make, live on a plan, stay out of consumer debt, save and invest, behaviors, discipline, consistency, patience. How do I get all of those things? Get over to the Wealth Builders. Get over to the Wealth Builders, and if you don't know how to do it, send me a DM on the Wealth Builders. Send me a direct message. Once you join the Wealth Builders, send me a direct message and say, Richard, I want to know, how can I be better at those 7 things you mentioned on your live stream? I want to be better at those 7 things. And you and I, if it takes us every day, we'll figure out a way to get you there. If it takes me and you every single day DMing each other and me giving you concrete ways to help yourself, only thing I ask of you is you do the work. I'm not going to do the work for you. See, I don't have a little magical wand that I can put fairy dust on your forehead and all of a sudden you wake up one morning and you're going to have all those things. It don't work that way. Got no fairy dust for you. What I got, though, is some proven practical exercises you can do on your own and be responsible for doing those, and you will change. But if you need that, the only place you're going to get it, guys, from me is through the Wealth Builders, through direct message. And guess what? The Wealth Builders over there in that community chat, they can help you with those things too, because they've all got them. They're all working on them. They're all trying to get better at them. Or do you want to be over here in the dark by yourself and not get no help? I don't know. That's on you. Well, all right, guys. Appreciate you, man. Like I said, get down in the description box. Take advantage of that Moo offer. Go get them 15 free stocks. Go get the 15 free stocks, man, and put yourself in position. Interest rates coming down. And I already told you, history says when interest rates come down, growth stocks become more valuable. Just telling you what history says. That's not Richard Fain. That's history. Interest rates go down. Growth stocks go up in value. And if I'm in the building stage of wealth, I welcome that. I welcome it. I welcome growth stocks to go up in value when I'm in the building stage of wealth, because over these last week or two, matter of fact, since July, I've been buying them at a deep discount. And hopefully over these next 18 months, as rates come down to 3.5% Fed funds, can you imagine what's going to happen to growth stocks? I can't wait. I'm very excited about it. Very, very, very excited. So I'd love for you to be excited, but you got to have some skin in the game. You got to be able to invest. You got to have some income that you don't spend on the 1%, but you invest in assets. And the first place I would start is that Moo link and get them 15 free stocks. That's the first place I start, because I never know. I may get a couple growth stocks in that 15 free stocks for free. So get down in that description box and click on that Moo link and get yourself some free stock and get yourself going, all right? Well, all right, man, appreciate y'all. Go out and do something nice for yourself. Go out and do something nice for somebody else that doesn't include money. Again, like I always ask you guys to do, put some positive in the world. See, when you put one good positive thing in the world, you get 10 back. You put a negative thing in the world, you're gonna get 10 negatives back. So please be careful what you put in the world, guys, because it's like a boomerang. It comes right back at you. I don't care, you can't duck and dodge. Oh, I'm gonna go hide in the cave so the boomerang can't get me. Oh, I'm gonna go in my room and get in the closet so the boomerang can't get me. Oh, I'm gonna turn off social media so the boomerang can't get me. No, it's gonna find you. That's karma. That's called karma. You put bad karma out there, you're going to get bad karma coming back at you like a boomerang. So please do yourself a favor, stop being negative and start putting positive in the world and see your life change. A lot of y'all don't get no change in your life, and you miss your blessings because you're putting too much negative in the world. Stop putting all this negative in the world and start getting your blessings. Ain't nobody gonna get you. You're not gonna get no blessings, guys, when all you do is put negative in the world. Put positive in the world and get your blessings. Please, please try that. Try that for 21 days. Try to put a positive something in the world for 21 days and see what comes back on the boomerang. All right, man. Appreciate y'all. Thank you. Lock it in with a thumbs up before you get out of here. Lock it in with a thumbs up. Stay strong. Stay long. Thoughts become things. See it in your mind. Hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy. Get wealthy. And I will see you guys tomorrow, 10:30 a.m. Eastern time. Don't miss it. Get you some more of this good stuff, this financial food. All right, guys. Peace.